I realized very quickly that the only way for us to really speed up the digital innovation is to get more focus. The core business, our old internal combustion engine, has to focus on restructuring and being profitable as it shrinks. Our new business have to have freedom to innovate without any speed issues.
Ford's latest announcement has shaken the car market to its core. This isn't just about Ford, it's about the entire automotive industry on the brink of a massive shakeup. Once the symbol of American innovation and automotive power, Ford is now making headlines for all the wrong reasons. Inventory overload, plummeting sales, and drastic measures. It's a recipe for chaos, and the ripple effects are just beginning to unfold. But what exactly is happening? Why is Ford making such dramatic moves, and what does it mean for you as a consumer? Could this signal a tipping point for the entire car industry? Stick around, because this story affects more than just dealerships. It affects us all. What's happening? To understand the magnitude of Ford's recent announcement, let's first take a look at what's happening on the ground. Visit any Ford dealership today and you'll be greeted with a sea of unsold vehicles. Rows upon rows of gleaming F-150 trucks dominate the landscape, their polished exteriors a testament to Ford's engineering excellence. But that's where the good news ends. Then you'll find Broncos standing their iconic designs evoking nostalgia for rugged reliability. But beneath the shiny paint and clever marketing lies a deeper problem. These vehicles aren't moving. Dealership lots meant to showcase a thriving turnover of cars now resemble storage facilities, overflowing with inventory that refuses to budge. And it's not just about gasoline-powered models. Ford's electric vehicles, once hailed as the future of the brand, are struggling to find their place. They sit awkwardly beside their gasoline-powered counterparts, failing to attract the same level of interest. Consumers seem unconvinced, and the stark contrast in demand is palpable. All this chaos is happening amidst what looks like business as usual. Sales reps are busy, customers are browsing, and paperwork is being processed. But make no mistake, this facade of normalcy hides a growing storm brewing behind the scenes. The root cause. So how did Ford find itself in this predicament? The answer lies in a series of strategic missteps that have snowballed into a crisis. For decades, Ford thrived on its ability to anticipate market needs. The F-150 became America's best-selling truck, and the Bronco earned its place as an icon of adventure. But somewhere along the way, the market shifted, and Ford didn't keep up. Overproduction is one of the biggest culprits. The company bet heavily on high-margin vehicles like the F-150, ramping up production even as consumer demand began to waver. Why? Because these trucks were cash cows for Ford until they weren't. Today, the gamble has left dealerships drowning in inventory, with cost piling up for every unsold vehicle. Then there's the EV challenge. While companies like Tesla made electric vehicles aspirational and exciting, Ford's offerings seem to struggle with identity. The Mach-E, while innovative, hasn't resonated with consumers the way Ford hoped, and the F-150 Lightning, an electric version of their flagship truck, faces stiff competition from established players and new EV startups. Adding to the problem is a disconnect between production and demand. Ford has been producing vehicles at a pace that doesn't match market realities. Meanwhile, the cost of materials, supply chain disruptions, and rising competition have further strained their operations. The market ripple effect. Ford's struggles aren't happening in a vacuum. When a company of this size falters, the effects ripple through the entire industry, affecting suppliers, competitors, and even consumers. Suppliers are among the first to feel the impact. Ford's production cuts, announced in response to its inventory crisis, mean fewer parts orders for suppliers who rely on automakers for their livelihood. This creates a domino effect where suppliers face their own financial challenges, potentially disrupting the industry's delicate supply chain further. Competitors, meanwhile, are watching Ford's troubles with keen interest. Rivals like Tesla and Toyota are seizing the opportunity to lure disillusioned Ford customers. For example, Tesla's recent price cuts and Toyota's robust hybrid lineup make Ford's offerings look increasingly uncompetitive by comparison. But perhaps the most significant ripple effect is felt by consumers. As Ford slashes production and dealerships scramble to offload inventory, buyers are being offered steep discounts and aggressive financing options. On the surface, this might seem like a win for car shoppers, but in reality, it's a symptom of deeper instability in the market. When manufacturers struggle, it affects the balance of pricing, innovation, and availability. The question isn't just about what happens to Ford, it's about whether these challenges signal broader issues in the car industry. Ford's response. Faced with mounting challenges, Ford has rolled out a bold and risky plan to regain control. In a high-stakes press conference, the company announced drastic measures aimed at addressing its inventory woes and financial struggles. Among these measures are significant production cuts, including for popular models like the F-150 Lightning. Ford is also closing several manufacturing plants and reducing its workforce by thousands. These moves are designed to streamline operations and reduce costs, but they come at a price. For dealerships, the production cuts mean a temporary relief from oversupply, but they also raise concerns about future availability. For employees, the layoffs are a harsh reminder of the company's precarious position. And for consumers, the reduced output could mean higher prices and longer wait times for new vehicles. Analysts are divided on whether these measures will work. Some see them as necessary steps to stabilize the company, while others worry that the cuts will weaken Ford's ability to compete in a rapidly evolving market. One thing is clear: Ford's strategy is a gamble. It's a high-risk, high-reward approach that could either save the company or accelerate its decline. As the dust begins to settle, the automotive world is left wondering, will Ford's bold moves be enough to turn the tide? The immediate aftermath. Ford's announcement of production cuts, plant closures, and massive layoffs sent shockwaves through the automotive industry. This was not just a company dealing with internal challenges, it was a behemoth signaling an industry-wide reckoning. Investors, dealerships, and consumers alike reacted with a mixture of disbelief, concern, and outright panic. As the news spread, it became clear that Ford's crisis was far from contained. The financial markets were among the first to respond. Ford stock took an immediate hit, reflecting a lack of confidence among shareholders. The drop was sharp and telling, with billions of dollars wiped from the company's market valuation. For a company that has long stood as a symbol of strength in the automotive sector, this was a grim reality check. At the dealership level, the effects were even more tangible. Rows of unsold vehicles that had once been a logistical annoyance now became a glaring liability. Sales representatives were under immense pressure to move inventory as quickly as possible, leading to an aggressive push for discounts, promotions, and financing deals. However, even with these measures, the sheer volume of unsold cars presented a problem too large to ignore. Dealership struggles. Ford's dealerships, long considered the front line of its sales strategy, found themselves grappling with an unprecedented crisis. The issue wasn't just about selling cars, it was about navigating a landscape that had suddenly shifted beneath their feet. For dealerships, the challenges were multifaceted, ranging from logistical nightmares to strained relationships with customers. One of the most immediate problems was inventory management. With thousands of unsold vehicles crowding their lots, dealerships had little room to maneuver, both literally and figuratively. The pressure to sell these cars was immense, but the demand simply wasn't there. Consumers were hesitant, wary of committing to big-ticket purchases amidst economic uncertainty. This created a vicious cycle. The longer the cars sat unsold, the more their value depreciated and the harder it became to sell them at a profit. The push to move inventory also led to a shift in sales tactics. Discounts and promotions became the norm, with dealerships slashing prices in a bid to attract buyers. Financing options were expanded, with terms stretched to make monthly payments more manageable. While these measures helped to some extent, they also cut profit margins, creating a new set of financial challenges. Customer relationships also took a hit. Buyers walking into dealerships were met with a sense of urgency that often bordered on desperation. Sales representatives, under pressure to meet quotas, were more aggressive than usual. This shift in tone left many consumers feeling uneasy, further eroding trust in a brand that was already under scrutiny. Competitors take advantage. While Ford struggled to find its footing, competitors were quick to seize the opportunity. Companies like Tesla, Toyota, and General Motors saw Ford's challenges as a chance to strengthen their own market positions. They did not waste time in capitalizing on the gaps left by Ford's faltering strategy. Tesla in particular made significant strides. The company's electric vehicles continued to dominate the market, thanks to their strong brand identity and cutting-edge technology. Tesla's approach to direct-to-consumer sales, bypassing traditional dealership models, allowed them to avoid many of the pitfalls that Ford faced. The contrast between Tesla's sleek, efficient operations and Ford's chaotic struggles was stark. Toyota, meanwhile, leaned into its reputation for reliability and innovation. The company's hybrid and electric vehicle lineup offered a compelling alternative to Ford's offerings, especially for consumers seeking fuel efficiency and eco-friendly options. Toyota's ability to balance traditional gasoline-powered vehicles with a growing range of electric and hybrid models gave it a significant advantage. Even General Motors, Ford's longtime rival, managed to outmaneuver the struggling giant. With its ambitious plans for electric vehicle production and a series of high-profile investments in emerging technologies, General Motors positioned itself as a forward-thinking leader in the automotive industry. While Ford was busy managing its crisis, General Motors was busy shaping the future. This competitive landscape underscored the urgency of Ford's situation. Every moment spent addressing internal issues was a moment lost to competitors who were more agile, more innovative, and better prepared to meet the demands of a changing market. Ford's EV challenge. Electric vehicles were supposed to be Ford's ticket to the future, a way to stay relevant in a rapidly evolving industry. Instead, they became a source of frustration and financial strain. The company's electric vehicle division, despite significant investments, struggled to keep up with its competitors in both innovation and market share. The Ford Mustang Mach-E, one of the company's flagship electric models, failed to resonate with consumers in the way Ford had hoped. While the vehicle received praise for its design and performance, it couldn't match the allure of Tesla's offerings. Price point, range anxiety, and a lack of charging infrastructure further compounded the challenges. The Ford F-150 Lightning, an electric version of the company's best-selling truck, faced similar hurdles. While the idea of an electric truck was appealing, execution proved difficult. Production delays, high cost, and competition from newer players like Rivian made it hard for the Lightning to gain traction in the market. The broader issue was one of perception. Ford's electric vehicles were seen as playing catch-up rather than leading the charge. This put the company at a disadvantage in a market where innovation and first-mover advantage were critical. Consumers looking to invest in electric vehicles wanted assurance that they were buying into the future, and Ford's struggles made it hard to deliver that confidence. The industry's future. Ford's crisis raised broader questions about the future of the automotive industry. Was this just a temporary setback for one company, or was it indicative of deeper systemic issues? The answer, as it often is, lay somewhere in between. On one hand, Ford's struggles highlighted the challenges of navigating a rapidly changing market. The shift towards electric vehicles, the impact of supply chain disruptions, and the rising cost of materials were issues faced by all automakers, not just Ford. However, Ford's particular set of circumstances, overproduction, misaligned strategy, and underwhelming innovation, exacerbated these challenges to a degree that others managed to avoid. On the other hand, Ford's crisis also served as a warning to the industry. It underscored the importance of adaptability, innovation, and consumer trust. Companies that failed to align their strategies with market realities risked falling behind regardless of their size or legacy. Consumers on edge. For the average car buyer, Ford's crisis isn't just a corporate issue, it's a problem that hits close to home. The landscape of the automotive market is shifting, and for many, this means grappling with a set of challenges that they didn't anticipate. Rising prices, limited model availability, and an uncertain future have left consumers uneasy. One of the most immediate concerns is affordability. The average cost of a new vehicle has been climbing steadily, and Ford's production cuts and inventory issues are exacerbating this trend. When a company reduces output to manage excess stock, the result is often a tighter supply and higher prices. Consumers walking into dealerships are met with sticker shock, finding that even entry-level models are priced beyond what they expected. Take the Ford F-150 Lightning, for example. This electric truck was initially marketed as a game changer, a more sustainable version of the brand's best-selling vehicle. However, high production costs and limited availability have pushed its price point far above what many buyers can afford. Similarly, models like the Ford Mustang Mach-E and the traditional gasoline-powered F-150 are becoming less accessible to the average consumer, both in terms of price and availability. For buyers seeking affordable options, the choices are becoming increasingly limited. Ford's decision to focus on high-margin vehicles like trucks and electric vehicles leaves a gap in the market for economical sedans and compact cars. This shift has driven consumers toward competitors like Toyota and Honda, brands that continue to offer reliable, fuel-efficient vehicles at more reasonable price points. The supply chain strain. Ford's struggles have also sent shockwaves through the automotive supply chain, revealing just how interconnected and fragile this ecosystem truly is. When a major automaker like Ford encounters difficulties, the ripple effects are felt by parts manufacturers, logistics providers, and even smaller suppliers who depend on consistent orders to keep their operations afloat. One of the most glaring issues is the disruption to supplier contracts. Ford's decision to cut production means fewer parts orders for everything from engines to infotainment systems. For suppliers who have built their business models around fulfilling these contracts, the sudden reduction in demand can be catastrophic. This creates a domino effect, where financial strain on suppliers leads to delays, quality issues, and even shutdowns that impact the entire industry. The semiconductor shortage, a problem that has plagued the automotive sector for years, has also added fuel to the fire. Even as Ford reduces its output, it faces fierce competition for the limited supply of semiconductors that are essential for modern vehicles. This scarcity not only drives up costs, but also creates bottlenecks that further complicate production schedules. Ford's EV gamble. The electric vehicle revolution was supposed to be a turning point for the automotive industry, a chance for companies to reinvent themselves and capture the imagination of a new generation of consumers. For Ford, however, this revolution has been anything but smooth. While the company has made significant strides in developing electric vehicles, its efforts have been plagued by setbacks that highlight the challenges of competing in a rapidly evolving market. The Ford Mustang Mach-E was a bold attempt to bring the brand's legacy into the electric age. With its sleek design and performance-oriented specs, it was positioned as a direct competitor to Tesla's offerings. However, the reality has been far less rosy. Consumers have been slow to embrace the model, citing concerns about range, price, and charging infrastructure. While Tesla continues to dominate the electric vehicle space with its robust ecosystem and brand loyalty, Ford has struggled to carve out a similar niche. The Ford F-150 Lightning, meanwhile, represents an even greater challenge. Trucks are a cornerstone of Ford's identity, and the Lightning was intended to signal the company's commitment to electrification. But production delays, high costs, and a lack of consumer confidence have made it difficult for the Lightning to gain traction. For many buyers, the idea of an electric truck is appealing, but the execution leaves much to be desired. One of the biggest hurdles for Ford's electric vehicle division is competition. Established players like Tesla have a significant head start, while newer entrants like Rivian and Lucid Motors are pushing the envelope with innovative designs and cutting-edge technology. Traditional automakers like General Motors and Volkswagen are also ramping up their electric vehicle efforts, creating a crowded and competitive market that leaves little room for error. The industry's crossroads. Ford's crisis isn't just a wake-up call for the company, it's a signal to the entire automotive industry that change is not only inevitable, but also urgent. The challenges faced by Ford are emblematic of broader shifts in the market, from the transition to electric vehicles to the impact of global supply chain disruptions. One of the key takeaways from Ford's struggles is the importance of adaptability. The automotive industry is evolving at a breakneck pace, driven by advancements in technology, changing consumer preferences, and increasing regulatory pressure. Companies that fail to anticipate and adapt to these changes risk being left behind, no matter how storied their history. Another lesson is the critical role of innovation. In an industry where differentiation is increasingly tied to technological advancements, automakers must invest heavily in research and development to stay competitive. This includes not only electric vehicles, but also areas like autonomous driving, connectivity, and sustainability. Ford's recent struggles highlight the risks of underestimating the speed and scope of these changes. The consumer perspective is also shifting. Buyers are no longer just looking for performance and reliability. They're also seeking vehicles that align with their values, whether that means reducing their carbon footprint, embracing cutting-edge technology, or supporting brands that demonstrate corporate responsibility. For automakers, meeting these expectations requires a holistic approach that goes beyond traditional product development. Ford's situation underscores the interconnectedness of the automotive ecosystem. From suppliers to dealerships to consumers, every link in the chain plays a role in shaping the industry's future. When one player falters, the ripple effects are felt far and wide, making collaboration and resilience more important than ever. Ford's strategic overhaul. Ford's recovery plan hinges on a bold and comprehensive strategy designed to stabilize operations and prepare for long-term success. The company recognizes that surviving its current crisis requires far-reaching changes, starting with its approach to production. For years, Ford overproduced vehicles, flooding dealership lots with inventory that failed to align with market demand. Now, the company is adopting advanced analytics to forecast consumer needs more accurately, enabling production schedules that match real-world demand. Another cornerstone of Ford's overhaul is cost reduction. By renegotiating supplier contracts and streamlining manufacturing processes, Ford is cutting excess expenditures while redirecting resources to high-priority areas like electric vehicle development. These measures aim to balance financial stability with innovation, ensuring the company remains competitive in a rapidly evolving market. Ford is also rethinking its marketing strategy. The company plans to focus on its strongest models, such as the Ford F-150 and the Bronco, while scaling back promotions for underperforming vehicles. New sales tactics, including limited-time discounts and flexible financing options, are being rolled out to attract consumers and reduce dealership pressures. Investing in its workforce is another critical part of Ford's strategy. The company has launched training programs to upskill employees, equipping them with the knowledge and tools needed to handle emerging technologies like automation and electric vehicle manufacturing. This focus on workforce development ensures that Ford's team is prepared to meet the challenges of the future. Rebuilding consumer trust. Re-establishing consumer confidence is one of the most pressing challenges Ford faces. Recent struggles have raised doubts about the company's reliability, innovation, and ability to deliver value, leaving many customers wary. To address these concerns, Ford is launching initiatives to re-engage its customer base and repair its reputation. One major focus is transparency. Ford is prioritizing open communication with its customers, offering updates on its progress and plans. By fostering a dialogue that includes addressing concerns and answering questions, Ford hopes to rebuild trust and demonstrate its commitment to improvement. Ford is also emphasizing sustainability, a growing priority for modern consumers. By expanding its lineup of electric vehicles and improving the fuel efficiency of traditional models, the company is working to position itself as a leader in environmentally friendly automotive solutions. These efforts are supported by sustainable manufacturing practices and investments in clean energy initiatives, which resonate with eco-conscious buyers. In addition, Ford is enhancing the ownership experience. From advanced driver assistance systems to seamless connectivity features, Ford is incorporating cutting-edge technology into its vehicles. These upgrades are designed to meet the evolving expectations of consumers and solidify the company's reputation for innovation. Collaborations and innovations. Collaboration has become a key pillar of Ford's recovery strategy. Recognizing that partnerships can accelerate innovation and expand market opportunities, the company is teaming up with technology firms, battery manufacturers, and other automakers to stay ahead in a competitive landscape. One of Ford's most significant collaborations involves a leading battery technology company. This partnership aims to address some of the electric vehicle market's biggest challenges, such as range limitations and charging times. By improving battery performance and efficiency, Ford is positioning itself as a stronger competitor in the electric vehicle market. The company is also exploring new business models to adapt to shifting consumer preferences. Subscription-based services, for instance, allow customers to access multiple vehicles for a monthly fee, catering to those who prioritize flexibility over traditional ownership. These innovative approaches are helping Ford appeal to a broader audience while diversifying its revenue streams. In the realm of autonomous driving and connectivity, Ford is doubling down on research and development. Collaborations with academic institutions and tech firms are enabling the company to create smarter, safer vehicles equipped with the latest advancements. These efforts are crucial for establishing Ford as a leader in next-generation mobility solutions. Lessons for the industry. Ford's experiences offer valuable insights for the entire automotive sector, underscoring the importance of adaptability, innovation, and collaboration. As one of the industry's oldest and most iconic brands, Ford's struggles highlight the challenges of navigating a rapidly changing market. The need for agility is one of the most critical takeaways. The automotive industry is in the midst of a profound transformation, driven by advancements in technology, shifting consumer expectations, and increasing environmental pressures. Companies that fail to pivot quickly risk being left behind regardless of their legacy. Customer centricity is another key lesson. In today's market, consumers demand more than just reliability. They want vehicles that align with their values and offer exceptional experiences. Automakers must prioritize sustainability, connectivity, and affordability to meet these evolving expectations. Innovation also plays a central role in the industry's future. From electric vehicles to autonomous driving, the companies that succeed will be those that invest in cutting-edge technologies and push the boundaries of what's possible. Ford's journey highlights the risks of lagging behind in this area and the importance of staying ahead of the curve. The road ahead. Ford's recovery is far from guaranteed, but the company's actions signal a determination to overcome its challenges and emerge stronger. By focusing on electric vehicles, sustainability, and advanced technology, Ford is positioning itself to compete in a rapidly evolving market. These efforts are not just about survival, they're about leading the industry into a new era. For the automotive sector as a whole, Ford's crisis serves as a reminder of the stakes involved in this period of transformation. The decisions made today will shape the future of mobility, influencing everything from consumer choices to global environmental impact. In this context, Ford's journey is more than just a corporate recovery story, it's a blueprint for navigating the complexities of a changing world.